Good morning, traders. It is Wednesday, June 19th, and not only is it a hump day, but it's a Fed day. So today is going to be an interesting one. Trade very carefully. I'm Jonathan van Clute with Stock Navigators, reminding you to real quick just hit that thumbs up button, give us a like on the video, subscribe to the channel if you want to know what's coming up very soon. And make sure you leave any feedback in the comments below, any tickers you'd like analyzed, any concepts you would like to understand better, anything I can do to help your trading, throw it in the comments, and I will see what I can do to assist. All right, for now, let's start by taking a look at the S&P 500. And we are at a very, very important level right now. In no small part because this is also a Fed day. And so we have to really see what happens. Yesterday, we had a crazy, crazy bullish day. Yesterday was just basically straight up nonstop. It was a crazy strong day. The market just did not want to give back anything. And that was very interesting coming right immediately before a Fed day. We won't know until it plays out, but to me, that feels a lot like a buy the rumor, sell the news kind of moment. And given that we're looking at this as probably, possibly, potentially being a wave one up, well, then we need a wave two down. We need that counter trend retracement. We need that corrective, pardon me, we need that corrective wave. And you could try to make the case that we already have it, that this was a 1, a 2, and now we're looking for a 3. Of course, these are on a smaller time frame. This is really what we're looking at here. I've actually already got it marked on this chart. That would be the 1, the 2, and now we're looking for a wave 3 up. I have my doubts about that. I could absolutely be wrong. We won't know until the market plays out, but it's just a huge run up like this the day before a Fed day feels like somebody knew something, and I'm wondering what today is going to bring. It's going to be very, very interesting to see for sure. But certainly, this wave one up, I suspect, is not done yet. It's going to be interesting to see, but on the 60, since I do think this is probably the 1, the 2, and then a 3 is still to come on the smaller time frame, that makes me think that this wave 1 is still happening, and we're going to have to see where it takes us. Of course, we have to keep in mind the potential possibility that really this whole thing was a 1 down. This is the 2 up, and then we're looking for a 3 down. It's going to just depend on market conditions, what the buyers and sellers want to do. We'll just have to wait and see how all that unfolds. We don't know for sure what the case is right now. Technically, right now, everything is bullish. We're still looking for continuation to the uptrend. But the oscillator has been getting weaker and weaker. This latest push up oscillator is not super impressive. It's okay. It's not it's not this down here or anything, but it could be up here. A much stronger push would have had a much bigger oscillator. So there's not a massive amount of momentum there. So given that it's a Fed day, today is going to be a very good day to trade very cautiously, or maybe even just sit out, wait and see how it all unfolds, what the announcement does to the market, what everyone thinks, and how they react. And maybe then trade. A lot of people like to wait until after the announcement, trade after the announcement, or just wait till tomorrow. There's nothing wrong with deciding that a particular day is a good day to sit out of the market and see what it wants to do. So anyway, today is going to be an interesting day, to say the least. Fed announcement comes out at 2 p.m. Eastern. That's 11 a.m. Pacific, which is where I am in California. So just keep that in mind. Things could get a little crazy around that time. Now, the Russell 2000, this is looking a little bit different, which is interesting. It's kind of, to me, looking, we have the same, initial ABC, potentially anyway, looking like, but then we have a slightly different push up. Yes, it's been a push up. It's definitely, the markets have been in sync in that regard. But on the 60-minute here, it looks more like we have a wave 1 and then a wave 2, and that we're in the wave 3 currently, in which case something around the 161 to the 261, which is up above, is probably our ideal target. But notice that we are right at the 50 SMA right now. Yesterday, market poked up above it, but then came right back down to it. And that's where we're stuck right now, is right at that 50 SMA. The 13 has certainly hooked around and is heading upwards, but that 50 right now is acting as resistance. So it's going to be interesting to see, again, with the Fed day and everything happening today, what happens. Is the market able to climb over the 50 and hold it? And that could be seen as what's happening right now. The market came back down. Yes, it sold back off again to the 50, but it's holding above it. So that is a potentially bullish sign. We could be hanging on to these gains and are going to be looking to push higher. I do see the oscillator getting weaker, but from back here anyway. But compared to where the wave two ended, the oscillator is actually stronger right now. So that suggests the possibility of some more continuation of this wave three. So again, as is always the case, we don't know with 100% certainty until after the fact. So we're just playing the possibilities, playing the probabilities. And today, probabilities a little bit thrown out of whack, given that, again, it's the Fed day. So we just don't know exactly what's going to play out, how it's going to shape up. So just trade carefully, trade cautiously, possibly, like I said, with the ES, possibly sit out today if need be. Or if you really want to trade today, but you're not feeling super confident in the risk involved, you could do the micro contracts for the ES or the RTY. You could trade the micros, they're 1/10 the size, and then you can trade and have much, much, much lower risk. So that's another way to do it if you just really want to get your trading in, but aren't feeling confident about taking the risk. All right, crude oil had a very interesting bounce yesterday, or actually today. Sorry, that's actually part of today's candle. So, or is it? No, no, sorry, I'm not zoomed in far enough. I couldn't quite see it, and the red was hard to spot there at that zoom level. So let me zoom in a little bit further. There we go. Okay, I thought that made more sense. So here was yesterday, and yesterday had a really significant bounce. But it is not really out of this sideways congestion area yet. It's working on it, but it hasn't been able to do it quite yet. We've got to take out this high here. If we do take out that high there, then the argument could be made that we have a higher low there, or I mean, you could even call it a double bottom. It's very, very close. And then start making higher highs and higher lows. But it is possible that this market is getting ready to turn around. MACD has crossed the signal line to the upside. Oscillators trying to gain strength. So things are looking like it could be heading upwards. We did pull back all the way just about to the 76.4. And then we've gotten kind of stuck right at the 61.8 a couple of times here. It got stuck there. The first time it got down to it, bounced right back up to it again, got stuck. Tried to get back up to it again, couldn't do it. And then now, again, it's kind of hanging right around that area. So this is a very significant area. And if this market can hang on to these gains and push higher, then there could certainly be follow through to the upside from there. And that would suggest the likely completion of this pullback. And then we're looking for what I believe is a wave of 5 up. That would be with a 1, 2, 3, 4, and 5 to the upside. So we'll just have to see exactly how it all plays out. We don't technically know yet. Oscillator right now on the 60-minute is weakening. But the market's kind of in a triangle wedge shape. So that certainly could be a continuation pattern. We could have a nice flag setting up here, a nice flag pole there, and then the flag there. So we'll have to keep an eye on this. If it breaks higher, then we can certainly expect continuation and be targeting perhaps the length of that flagpole as a reasonable profit target. So that would take us to, somewhere here-ish, somewhere around there on the daily. So watch for that. We are above the 50 SMA on the 60, which is bullish. We're also hanging right at the 13 EMA on the 60. But on the daily, we are well below the 50 SMA. So we've got some room to go before we're really able to declare the bulls are in charge. The oscillator is very clearly well below the zero line, and it's got a ways to go before we can, like I said, definitively sort of declare victory with the bulls. We got to get over that zero line and retake the bullish component of the oscillator for that to be confirmed. All right, now let's take a peek at gold, which is trying to hang on to these highs, but frankly, it's having a hard time doing so. So far, every time it's gotten up here, the sellers have come in. A lot of wicks, a lot of wicks, a lot of wicks. buyers are still buying. They're holding it up. I don't know if they're going to be able to continue to do so. Oscillator is kind of trying to hang on, but it's not really getting stronger. It's not really gaining in strength. So you need to be really cautious here. We also have a high from back here, and you could suggest that there's a sell zone right about there that we have gotten stuck in twice now. But what's interesting is if you zoom out on this chart and you go back in the past, what do you also see? This same level has been very important in the past, and it has reversed the market before. It also has acted as just kind of a sticky area several different times as well. So this is a potentially significant resistance point. The market is having a real tough time getting over it. We're also right up at the top of this rising parallel channel. We've just been kind of stuck, not able to really get over that and hold it. So it's going to be really interesting to see what happens. Do we come back down, maybe test the bottom of that channel again? Or are we going to go sideways for a while, hang on to these gains, and then go higher? But we've got to see this level get taken out and then held. And so usually what will happen is price will get up above it, come down to test it, and then head higher. We see that, then we know for sure we've got continuation to the upside. So just be real cautious. Gold is a little treacherous right now at this level to the long side. Oscillator on the 60 getting a little bit weak. It wasn't able to get up back to the previous high. And of course, the oscillator being lower than this just reflects what the price was doing. So that's not a divergence or anything like that. It's just following the normal behavior, lower price, lower oscillator. But it does show that in general, the market is a little bit weak up at this level. So we need to be really cautious. Certainly, if you're a gold trader, trade carefully and use good money management and all that good stuff. Now, natural gas all of a sudden has had an attempt to go higher again. And you can see that better if I zoom in a little bit on the 60-minute. Last couple of hours, it's trying to break out of this this area and start making higher highs and higher lows. Hasn't been able to hold them, though. If it's able to get up over this level, get up here, test and hold and go higher, then we could argue that we have the lower high, but then we have the first higher low. Or you could also say it's a double bottom. It's very, very close. And that would also be with a divergent oscillator. So it's looking good for the possibility of a bounce in natural gas. And not to mention the fact that, I mean, look how natural gas has been beaten down. It is way, way, way down at the very, very bottom of this buy zone from way back here. So we are certainly at an important level, a key level. And right now you can see what the bottom of that buy zone is doing. It's really, really holding very, very well. So I could see getting potentially bullish on this market. We've also got a slightly divergent oscillator going on here. With price getting lower, oscillator getting a little bit higher. So I think chances are good for at least a bounce. And if this market can get up over the 50 SMA and hold it, then we could see some continuation to the upside. So it's got to break up above, pull that back down and test, and then head higher. If we can see that, then we might have a final reversal in this very long-term downtrend that has just been plaguing this market for quite some time. Especially if you zoom out to like a monthly chart or something, you'll see this market has been pretty much in free fall since its inception. So it's looking like we might be at a level where finally we could have at least some sort of a bounce to the upside. And last but not least, Bitcoin. And Bitcoin is really hanging on to these gains. It just will not go down. It's very impressive, but we are looking at this as probably the end of the wave 3. This is likely the end of the wave 4, in which case we're in the wave 5 now. And wave 5 is going to be a short one. And what's just overhead? 10,000. Not only that, but there's a sell zone right there, a significant reversal point from the past. Zoom out a bit, you can see it. Whoops, there it is, right there. So we've got a very treacherous area right up here. 10,000, of course, is a extremely key psychological level. Everyone's talking about Bitcoin 10K. That is the level that signifies that the bull run is formally back, and so on and so forth. And then we're genuinely in a bull market. We got to get over 10K and hold it. Personally, I'm expecting this to hold as resistance. I'm expecting to see 10K to initially resist, be difficult to get over. See a real nice, healthy pullback, given that that could be the end of a short wave 5, and then get a nice ABC correction to the downside, get a really good pullback. I mean, I don't know, maybe down to this level, something like that. Or it might just get kind of stuck in that area. That's pretty common as well. Pull back down to the wave end of the wave 4, and then march higher from there. But it's not going to be a straight shot from here, folks. At least I don't think so. Of course, that all depends on buyers and sellers. So what I think really doesn't matter. If the buyers want it bad enough and they are willing to buy at these prices, then the market will go up. It's just simple supply and demand. That's it. So we'll have to wait and see right now, but it's looking a little dicey. So just watch out for that 10K level. I would not get overly excited about going long in a serious big way here. Certainly if you're just dollar cost averaging or something like that, you can always be added to your position. That's fine. But I'd be wary of initiating a new long right up at this level. I would want to wait for a nice, good, significant ABC correction. All right, that is it. Last peek of the S&P, nothing has changed. So let's get ready for the open in about a half hour. I'm going to go get ready for the premium trading room. So those of you who will be there, I'll see you there in a few minutes. And for everybody else, we'll do this again on Friday. So again, this is a Fed day, so be cautious, be careful. Watch out for what happens at about 2 p.m. Eastern, 11 a.m. Pacific, and just be prepared for volatility and for things to get a little weird, as often happens. So one last time, I'm Jonathan Van Clute with Stock Navigators, reminding you to hit that thumbs up button, give us a like on the video, throw any feedback you may have down in the comment box below, anything we can do differently or better, or anything to help you, tickers you want analyzed, anything like that, throw it down in the comment box. We will definitely take a look at it, and make sure you subscribe to the channel so that you can be kept up to date on big things we've got coming in the very, very, very near future, like any second now. It's going to be cool. All right, that's it. I'll see you again on Friday. Take care and trade well, everybody.